Hello and welcome to the Books Crypto Club weekly catch-up on Zoom. It is Sunday the 12th of June 2022, and today we are going to talk about a number of areas in the crypto space. We're going to be talking a little bit about cryptocurrencies. We're going to be listening to somebody who's the CTO of Val, which is a really interesting project. It says it's changing the way that money could work and so on. And we're going to be looking at some advice, some recommendations, some general thoughts as well. So stick around, hope you enjoy it. Do click on the subscribe, do click on like. Even better, come along to a future session. We hold these every Sunday at 7 p.m. till 8 p.m. UK BST, open to everybody to contribute. We welcome novices and experts alike, those who are just keen to learn more, and there's those who are keen to share as well. So do come along sometime and come and join us. Anyway, I hope you enjoy today's session. Hey, welcome to Crypto Club. Hi, Ray.
Hello, hello.
Hi, Anthony. Well, hi, Eric.
Hey, guys. Nice to join. Happy to see that there's a Zoom. I've actually been part of your Telegram group for quite a while, but never actually read it because it was just archived and stacking up messages. And
Yep.
Frankly, I have just too many groups, and I've been cleaning up. I've been, leaving all kinds of stuff, and then I came across this, and I thought, oh, this is a good place to maybe talk about Val a little bit, something or other stuff that I'm involved with. And then, of course, I saw the posting that we're having a Zoom, so I also do a lot of Zoom calls and clubhouses and other kinds of things like that.
Cool. Well, to all of you, welcome aboard. The format of these sessions really is pretty open. We don't usually have an agenda as such. I don't usually have a structure. We tend to talk about whatever people want to talk about. So either if they've come along as a novice and they're just learning all the buzzwords and all the phrases and they just want to know a little bit more, then we can usually help to explain some things on that. At the other end of the spectrum, we get some people who are real experts. They're developing projects, doing things, and they like to share information in some way. That's brilliant as well. So if any of you are working on anything that you think might be of interest to the others, that's fantastic. And then we have everyone in between. We've got people who sometimes join us who've been in the market for a few years, and they might know some things about some of the more basics that they can help with people.
Well, I think there's a discussion to be had about the investment space. Perhaps you could say, you could even call it. It's really more like a gambling space today. So just by way of introduction, I spent 30 years in Wall Street. I found Bitcoin in 2012. I'm a developer, and I spend a lot of time with tokenomics. And so what I can say about these three coins that Ray mentioned is that I never heard of them. And there's, like you pointed out, there's thousands or tens of thousands of coins that I've never heard of. And the bottom line is that today, making a coin is a retail operation. Anyone can do it, right? It's not like it was back in the day where making a coin meant having to build a network and getting nodes to mine it or whatever the thing was, right? And you had to, the sort of degree of investment and level of commitment that you had to get from the participants in your little venture was substantially higher than it is today. Mm-hmm. And so the problem with that is that when you're, if you're going to so-called invest, you really need to understand the difference between gambling and investment. And to a large extent, there's that sort of intermediate territory called trading, right? That blurs the line between investment and gambling.
Hey guys, here. Sorry to interrupt. But I have a big gambling addiction, and how would you say that compares to the stock market?
I would say that there's not that much difference. In reality, the only difference is the stock market is technically regulated, and crypto markets are technically not. There is one other difference as well, that if you're on the stock market and you buy shares in a company, you are actually buying shares in the company. So you are genuinely investing in that company. Whereas if you buy in particular crypto tokens and quite often cryptocurrencies, you're not buying ownership of that company in any way. I sometimes have this battle with people. It's not actually investing, it is speculating. You're buying something in the hope it will increase in price. That's not true investment in terms of investing into a company to help it to develop. And the way I described it, it's a big difference, is it's a little bit like buying cans of Coke out of a Coke machine. You know, you can think of a can of Coke as being a crypto token or a cryptocurrency. All because you've bought a can of Coke doesn't mean you're now invested in Coca-Cola. It means you've bought cans of Coke and you've bought them in the hope that they might increase in value. So that's where I kind of say is the similarity or difference. I don't know, you know, Eric, would you support that or different perspective?
No, absolutely. There's a difference in the way that you surrender the money, right? If you surrender the money for something that you're going to consume, that's called a product, and you have zero upside for that. If you surrender the money, and so that actually goes to the term speculation, because speculation actually exists in all three of the territories we talked about before. Investors speculate, traders speculate, gamblers speculate. Right. They all basically expect that they're going to make money in some way, and that means that they're going to buy low and sell high. That is, I mean, the nature of the entire activity in its various phases. The thing though is, even within investment, there are various categories. Like there's, you know, value investors, and there's long-term investors and growth investors and etc. The thing though is that at the end of the day, you should know what you're investing in. You should do research, right? If you are promoted to, you just have to think about the fact that the people who are promoting have a vested interest in doing the promotion, and that they may or may not be exactly like they have a set of goals, and they're going to sell you, you know, whatever it is because they want your money. And what happens afterwards? Well, that's no longer the concern. Once you've bought into their little deal, they've got your money, and now, you know, rug pulls and con jobs and all of these kinds of things are enormously prevalent in our space because it is unregulated, right? And so we like the freedom. We like the idea that the little guy can participate, that there aren't all of these barriers set up so that only the big guys can profit. But at the same time, we have no discipline with respect to this. And so that leads to tears. You know, at the end of the day, the bard once said, a fool and his money are soon parted. And so, you know, when I participate in these kinds of groups with people that are, you know, relatively neophyte to the space, I really like to talk about fundamentals. Sure, you're excited about this coin. What is so exciting? What are those people doing that has actual value, and how far are they along? And what kinds of metrics have you got in your head to make these decisions, right? And the answer mostly is, well, they have no idea.
Do you think ApeCoin would be a good investment?
ApeCoin?
Yeah.
So that's actually an interesting question. I have generally been opposed to NFTs because they're not a technology, right? An NFT is really a marketing vehicle. And the question goes back to what I was talking about before. What is the underlying value, right? So if you
think ApeCoin's good.
Okay, sure. And ApeCoin as a coin that represents as a non-NFT token that represents the effort of building and selling NFTs, sure. Hello, Alana.
Yeah, Alina, my favorites. I was saving her till last for the best.
Hello, everyone. Hello, Gary. It's nice to be here back again.
Yeah, that's good. It's good to see you back again. Do you have a crypto wallet yet?
A Coinbase one.
You do?
I do, finally.
Wow, fantastic. Congratulations.
Yes, thank you so much. So I'm a beginner in cryptocurrencies, in NFT, and in everything. So I usually ask simple questions when I join.
And this is why I really value you joining each week, because the questions you ask are absolutely fantastic. I get feedback from people who say, oh, that's really, really good. should have you on
Okay.
different programs, that kind of thing as well. So that's good.
That's nice.
Cool.
That's nice.
Excellent.
I'm a little bit late today, but so as I joined and I was listening to Eric, Eric, at some point you said something that I possibly did not understand right. You
Sure.
said that there are different type of investors or traders, and for example, like growth
investors. So investors who look for value investors are investors who look at a company and find it to be underpriced given the fundamentals. So they're buying something cheap, in other words.
Mm-hmm.
Growth investors are investors who buy something that is properly priced, but they're willing to, their expectation of the growth of that particular company within the sector is that they're willing to stick with it for long enough to get the particular return that they're looking for, right? So if you're looking, if you're looking for a 50% return, how long is the company going to take given its current trajectory to produce that for you? And therefore, are you willing to make the commitment of time to that position to get your return, right? So there's sort of various ways of looking at, how to allocate money. And a lot of that has to do with your risk tolerance and your expectations of return. So these concepts are fundamental to investing, and they're largely missing in the crypto world. People just throw money at stuff because it's $20 and who cares, and they really have no idea what is going on, like who these people are, right? And then you have people like Massimo who just sort of pop in and they have some bizarre thing to say, and then they pop out. And you see those types in Telegram groups and in crypto projects all the time, people who make no sense at all, right? And so your responsibility is to yourself, right? If it's your money, you hard earned it, and you would like to make it grow, sure, that's the idea of capitalism. But now you're responsible to yourself to make sure that you make the right decisions, and that ultimately means research, right? Are there some people out there that are doing important things? Do they have potential? Do they have a good team that can actually execute? Because there's tons and tons of ideas, right? But who can actually make something happen? And that's a rabbit.
And it's a fascinating rabbit hole as well. And it's one of these things that the more you get into these things, the more you realize how much more there is to learn. So that there is so much on there. As I'm sure Alina's discovered this. She describes herself as a novice, but she actually knows an awful lot more than many other people.
That's good. So that's humility, which is actually something that the market teaches you.
Yep.
Every time you get a little arrogant and you think you know what you're doing, the market will smash you in the face and you go, okay, I was wrong.
Yeah, and that's where it's useful at times to get it wrong a little bit, just to remind yourself that you don't get it right all the time. You do get some people who are new to this space that they happen to pick a couple of coins or something, and fortunately they happen to go up, and they then think they're rock stars, and they start producing YouTube channels and everything. So I certainly, this is why I'm always cautious about, first of all, people who ask for straight up advice. Anyone who says something like, oh, do you think ApeCoin is a good investment? Probably that they've not really done the research themselves. And what they really mean is not, is ApeCoin a good investment, or is the price of the token or the crypto going to go up? And when they're asking such shallow question, probably means that they're not really interested in the whole space. They're just following a chart and they're watching it going up and they're saying, is it going to go up further? So yeah, it is an interesting one. It's where I'm always cautious as well of, it's fascinating the difference in communities. That communities that are on Telegram tend to be quite knowledgeable, supportive, educational. The groups on Facebook tend to be the people who are either looking for a quick profit or are scammers, or are scammers looking for people looking to make a quick profit. So it's a happy marriage between the two of them. So I always urge extra caution when you look at what's on Facebook.
Yeah,
Alec,
I totally agree. The more the less technical you are, the more likely it is that it's a scam.
Absolutely right. So Eric, tell us a bit more. Whereabouts are you based?
I'm in Los Angeles.
Okay. So have you been were you over at Consensus the other day over in Texas?
Nah, I can't really take the time to. I mean, I used to, right? In fact, I used to arrange those events. I was one of the coordinators for BlockCon here in LA. We had back in the day, and it was huge. Like, we filled warehouses and warehouses with people, and we put I interviewed all the speakers and did all this kind of stuff. But I don't really have time to even attend anymore. I just I'm basically focused on code and business development.
Okay. And did you say at the beginning you're working on a particular project at the moment?
I'm involved in a myriad projects in various capacities. So I'm the chief technical officer of Cryptospace. We are a trading desk focusing on the Latin American markets. We actually moved from the US, though we retain an office here, but we're now incorporated in Mexico. I'm also the co-founder of Alluvial Rewards, which is the US and Mexico licensee for the VOW ecosystem. I'm an advisor to Infium, which is a network of about 75,000 investors around the world, and we do presentations every week. So we let entrepreneurs give us their pitches, and we sort of evaluate what they're doing, if it's interesting, that sort of thing. I've in the past been the global ambassador for Mosic, which is a Chinese-based music rights management company. Okay. And for the UniArts network, I was also an ambassador, so I wrote on the subject a bit. And I do a lot of tokenomics, token economics analysis. At any point in time, I'm talking to various groups that want to talk to me about tokenomics, right? And I've got my fingers in all kinds of other things. So it's all crypto all day for me.
Okay, that sounds fantastic and a fascinating range of things there. I wonder then, could you share with us any thinking about the Latin American market? How is it behaving at the moment? Is it the same as the rest of the world? Because I sometimes find that when like Europe and even the US sometimes, certainly Europe, that they're all going through this doom and gloom of, oh, it's crypto winter and it's awful and it's dreadful. And then you suddenly discover there's an innovation going on in Brazil or something, and it's really fantastic. Yeah. What you're finding at the moment?
So market penetration in Latin America is very, very shallow. Mm-hmm. However, from a mentality perspective, when you talk to Latin Americans, you get the clear sense that they know that they're behind the curve and they want to catch up. In fact, they're less far behind than they think, right? Mm-hmm. There is, for example, a lot of technology in Uruguay. I was just interviewing because as a CTO, I do a bunch of stuff, so I needed a team to work on cloud technologies, and I found a very competent team in Uruguay, right? And they think that they're like living in the middle of nowhere and stuff, that they're behind, but they're really not. They know their stuff. Okay. So, but the thing is that it's a very shallow layer of that world that is connected, and they're well connected, and everybody else is just out of it. So our experience has been that when my partner connects with people down there, they are super excited to talk to him, and they just want him to be like their savior. Like, how do we play, right? How do we get in, and how do we do this? Tell me. Yeah. And so it's much easier. In the US, the prevalent attitude is one of fear. If I buy crypto, is the government going to track me? Am I going to, is it, it's money for criminals? and I'm going to have to pay capital gains, and I just don't want to even play that game, right? So Americans just sort of sit on what they've got, and they view crypto with a jaundiced eye. Although again, there's layers, right? The upper layers, the JP Morgans and Goldman Sachs's of the world, at that upper crust, they're all into crypto.
Mm-hmm.
They're, if you see, they're all thinking it's going to be 150,000 a coin by the end of this year, right? And it's all Bitcoin, right? Their Bitcoin dominance is huge. They maybe look at Ethereum a bit, but they most certainly don't look at ApeCoin or any of these other things, okay. Right?
I was going to say, are they being woken up to the NFT phenomena at all, or are they mainly staying with the main cryptocurrencies then?
You mean the large financial institutions?
No, I think the large financial institutions are thinking about how they can use NFTs in ways different to what's currently available. I have a belief that they'll end up using NFTs for shares and that kind of thing over time.
Yeah, there's a little bit of that, but that's too utilitarian to be interesting. Mm-hmm. I mean, more interesting is what Nike's doing, right? They're selling shoes as NFTs for delivery at some point. So this is really like a pre-sale. And as a matter, from that perspective, I would make the argument the SEC is probably going to come and bite their heads off, because now it's clearly a security, right? Mm-hmm. And it's a large institution doing it. If it's some dude that took some photographs and put NFTs to it, it's really too hard to chase. But Nike's easy to chase.
Yep.
So my expectations of the NFT market, if you could even call it that, is that it doesn't really have a use case. It's just going to ultimately fizzle out like STOs did, if you remember those.
Yeah.
Right. Everyone was into, we're going to create security tokens. And my point was like, okay, that's so retarded. Then you just call them shares. We already have them.
Yep. I kind of, I'm going to have a counter view a little bit, because I've seen several cycles in the market. And I actually saw it with ICOs, so initial coin offerings, which they exploded in 2017, 2018.
I remember that time. It was so exciting.
Yeah, and then they collapsed, and they turned into, as you say, either TGs, which are token generating events, or STOs, which are security tokens. And the idea of a security token was pretty good, actually. It's like, let's use a crypto-based share issue scheme. In effect, that's what it's turning into. But I think a lot of them then hit so many regulatory problems that I agree with you, it all died away. I think NFTs are going to be interesting, though. I think we're only just at the beginning of seeing how NFTs are going to be used. So at the moment, we're using them to provide evidence of ownership of digital assets like music or images, or Bay Area yacht club avatars and that. But I think we're going to see a next generation of NFTs that will be representing ownership of other digital assets. And that's where I think it's going to start getting interesting. And as you said earlier on about, just have shares instead of tokens, I actually think that some NFTs will become the equivalent of shares. And I think that's good, where it's going to get really exciting.
I mean, I think that the bright line here is it under the control of the authorities, or is it not, right? I mean, shares are highly regulated. When you buy them, you don't even have them. Your stockbroker has them. And they can do things like lend them for shorting purposes, right? And stuff like that. And so it's really a registry kind of thing that is run by the government. The same thing with real estate, right? You don't actually own a house. You own title, and the title is held at some registry, and that's upheld by the government.
Yep.
Blockchain is inherently different. The blockchain is the authority. And so to the extent that NFTs are a creature of the blockchain, that's potentially interesting, but their primary use case has been as a proxy for real world assets And so as soon as you do that, you fall right back into the whole title registry and rights thing, right?
Yep.
Rights is a creature of law. And if you're going to have law, then you don't need blockchain. And if you have blockchain, hopefully you don't need law.
It's kind of funny because I'm speaking with some legal people who are actually keen at working out ways of utilizing blockchain-based platforms to solve some of the issues that they have in the legal domain. And it's where you discover, you go, well, why would you want to put something on a blockchain? And, I'm a blockchain advocate. So I think when it's used right, it's really, really good. And, they say, well, we'd like to stick stuff on the blockchain because then it's immutable and it's a single source. So they're saying all the words that I've used for several years as well. And I then turn around and say, well, can't you do that with an existing database or something? And they said, you would not believe how bad some of the practices are, type thing. So maybe we might be at the point with just improving things.
I would make the argument that we probably can't replace law with blockchain, right? With code. And that is for the single reason that there has to be judgment in a lot of cases. Now, we could replace a lot of law and be much more effective on blockchain because what blockchain does is it takes away discretion. Right. So you write a contract with another party, and you write it in the English language. And when there's a conflict, you go to court, and your lawyer will argue, well, these words mean the following, and the other lawyer will argue the opposite. No, the meaning of this word, it's so and so. There has to be adjudication there. There's a lot of law. The issue of jurisprudence, the construction of law, is, I think, something that is really not discussed very much. But jurisprudence around the world sucks. In Germany, it's great, right? In the United States, there's so much ambiguity in the way that law is constructed and it's on purpose because it allows the agencies to then interpret nilly-willy what they want to do, and that's basically unfair to everyone. So blockchain makes that disappear because you write code and the code is completely unambiguous, right? And so we could probably replace a lot of law with unambiguous code, but not everything.
I agree with that. And I've done some work in this space as well. And I always used to find it quite funny when people use the term smart contract. And straight away, lawyers started loving that, thinking, oh, smart contract, I know what that is. It's like, no, it's just a computer program. And as you say about ambiguity, I sometimes joke with some of the people I know who are lawyers that they seem to spend half their life writing contracts which are completely clear, completely unambiguous, etc. And then they spend the other half of their life arguing that they're not clear and are ambiguous. But when you speak to lawyers, they will say that they will write contracts in order for business to take place. And that does need, as you say, some of that flexibility. And as I say to people, you can't code flexibility into an Excel if then else statement. And this is probably exactly with smart contracts. Yeah.
Yeah. I mean, okay. So you can write relatively complex logic, right? Business logic. I know because I used to build pre-trade compliance systems for trading firms. And for example, the indentures that ruled the collateralized debt obligations were about 400 pages long, right? And you have to basically read the legal language and write a program that implements those rules, right? And it gets really, really gnarly, so you can, but and I think it would save a lot of argumentation and a lot of court time if we started writing contracts in the blockchain rather than in English for adjudication in a court. But you can't do, you can't do criminal law that way.
Yeah,
because that's a facts and evidence based kind of thing where it's non-determinative, right? So.
Well, that's where it's interesting. You look at certainly on civil law or around commercial law and that. So in the insurance industry, for example, there's been a growth around writing insurance contracts that use a very precise style, so they comply with the industry standards. And one of the problems with insurance actually is that it's got lots and lots of standards, which is a problem in its own right. But they're using it for things like parametric insurance. So if you write a smart contract that says, if the rainfall at this rainfall sensor between this date and this date exceeded this level of like 50 milliliters or whatever, then pay a claim. That's quite nice and clear. But it's very rare to find contracts that are that unambiguous. So things that are parametric. So not only are they Ricardian in nature, i.e. you can code them logically, but have quite clear outcomes. It kind of works for that. But it's interesting going back to your point about like coding law and that kind of thing. You look at, is it the Accord project, which is trying to put into place legal terms and conditions in effectively subroutines or clauses that you can pull in. So I know there's a company, I think it's based in New York, called Clause, and I think they write legal clauses in smart contracts so that you can pull them in, and they use the Accord standard or the Accord project standard, which is about having legal terms, you know, actually clarified and simplified.
Yeah. Also, the EOS platform had that concept, right? Where every smart contract that you wrote would have a Ricardian contract attached to it, so that it could be interpreted in a court of law, as well as enforced by the blockchain.
Okay.
It's kind of an interesting concept and a nod of the head to the fact that we are never going to have one or the other. It's really, there's always going to be that sort of touch point.
It's interesting as well in the UK. There's a group which is I think it's the UK Jurisdictional Task Force. So this is lawyers and judges and technical specialists actually working together to determine the legal nuances around this whole new blockchain crypto world. And they've developed some great recommendations already around like digital asset ownership. And they've done some good stuff on smart contracts as well around things like legal enforceability, because it's one of those whole things that one of the first questions you tend to ask with a legal contract if you go into dispute is, where is the dispute going to be heard? What's the jurisdiction? Which is the governing law? And if that's not written into the contract, then the governing law is going to be whichever the plaintiff decides to take it in.
Right.
And so it's interesting. UKJT, I don't know where they're up to. They were writing something on smart contract enforceability. And I think they were going to write a recommendation. And usually when they write something, it isn't law per se, but it is accepted as very clear guidance and direction for a judge to use in the event that there is a court case. And then when the judge uses that recommendation, then it becomes law by virtue of precedents. So at least in the UK, there's some stuff. I don't know how that works in other countries, though.
Yeah, the choice of venue is always a contentious issue, because there are overlapping jurisdictions, right? For example, in the US, there's the issue of whether, like, a transaction between, let's say, a New York vendor and a California consumer, where does that transaction actually take place, right? And so the answer is, it could be in New York, it could be California, or it could be federal.
Yep.
Right. So there's always a lot of room to finagle things, and I think that goes away with blockchain, right? If you adjudicate on the blockchain, the issue that I have with smart contracts is that you can define business logic, but that business logic has to be applied to real world events. And so now you need oracles.
Yep.
And there really aren't good mechanisms for oracles. I think Link is it's an excellent, interesting project in that they've just taken up the whole space, right? Okay, oracles for everything. And so your little meters, your little temperature, gauges, and your pressure things and all this kind of stuff, that's all the IoT type of stuff, can end up on the blockchain, and those oracles can serve to inform the smart contracts. That's all good.
Mhm.
But what about all of the things that you can't do, like he said, she said, right?
Yeah.
So, so I mean, even some of that could be managed, because like human interactions could be essentially mediated by blockchain, so that any statement is made in a machine readable form and can be converted into the kinds of inputs that your business logic needs, right? Like for example, you could make a claim. Oh, I fell and broke my leg, right? But it isn't just a piece of text that's recorded in the blockchain. It's maybe some kind of interview questionnaire where there's a field ultimately that says broken leg, and the answer is true or false, right? And then you made that statement, and that gets timestamped, and so you've made an assertion that serves as the basis of the claim, and that can inform the smart contract. And so you then can't go back later and say, no, I didn't say that.
Yep.
Right? Because you've disambiguated the expression, the form of expression, and you've created proper attestations for it, and now it serves as sufficient evidence for your business logic. But we're so far away from being able to do that kind of stuff.
I think that's the thing, though, that certainly seems to be the vision. And as with everything with technology, sometimes stuff happens quickly and you don't notice it, and sometimes it happens far slower than you'd want it to. And
yes, sure.
It's always the thing that technology never meets the hype that the marketeers have put into it. So
and they also say novelty precedes utility.
What was that, Alina?
They say novelty precedes utility.
Normalcy.
Absolutely.
Novelty.
Yeah. Novelty. Okay.
Yes. Yeah, no, definitely. But I mean, I think there are some chunks of this that are attackable. Like, I don't know if you remember Andreas Antonopoulos, back in the day when Ethereum was new and they created the DAO, right? Mm-hmm. One of the proposals for the DAO was that the New York Convention be encoded, right? The New York Convention is an entire body of law that regulates arbitration. International arbitration is most useful, right? And there's billions of dollars that are spent every day on arbitrators to essentially go down a rulebook that a smart contract could. Mm-hmm. And so, so you could save billions of dollars to corporations because they could just basically litigate through a smart contract that understood all of those rules. It never happened because the DAO crashed, and no one ever picked up on the thought, but it is certainly possible. So
there's certainly a project which is Materium. Materium has got a couple of people I know. It's obviously got a lot more people, but I certainly know a couple of them. One of whom was working with the Ethereum Foundation when they first launched. And Materium was all about, at the time when they were kicking off, around dispute resolution. So I think they were trying to go down that route. But I think Vinay, who was driving it, got so tied up with so many things. I think that may have not quite gathered the pace it needed to. But that's a fair thing. There was something else that you mentioned on that as well, which was interesting. It's dropped away. But yeah, I think it'll be interesting to see where this goes. Because the other thing I love about arbitration is that actually international arbitration is binding across jurisdictions, and jurisdictions will accept and recognize decisions from arbitration, whereas laws do not necessarily recognize each other's laws. So as you say, in the States, that they've got laws at a state level and at federal level, which can sometimes disagree with each other. So a New York judge will not take as read a decision by a California judge. Whereas,
that's correct.
Whereas if you've got international arbitration, that goes not just across state, but internationally as well, which seems a better way of doing it. So there's hope yet on that.
Well, to all the signatory countries anyway, but that's, at least for the 1947 convention, that's most of the countries.
Yeah, but I think going back to the whole thing, the more fundamental thing, you mentioned the DAO before. which was the first big true DAO, as such as a decentralized autonomous organization. It launched, I think it was 2017. And that actually, I think, was a wonderful experiment that failed for two reasons. The first of which was that everyone was saying, well, code is law. And the very fact that they then chose to ignore what the code did, even though the code was exploited, proves that code is not law. Law is law. And the other thing is that the very fact that the Ethereum founders or the foundation agreed to do a hard fork meant that you struggle with the concept of consensus as well. And
immutability, right? It was supposed to be immutable, and now they made it not.
Exactly. So for me, it actually achieved 3 failure points, which for an experiment is great. It showed that code is not law. It shows that consensus doesn't always work, and it shows that a hard fork can mean that something isn't actually necessarily immutable, depending upon how it's done. So I think it was a valuable lesson, very, very useful. But yeah, you're right. It did seem that the team, apart from, did Gavin go on and do Polkadot or something? I think he was one of the team from there.
Yes, correct. Yes, that's Gavin. Yeah, would.
So he's carried on with his stuff. And again, Polkadot and things like Chainlink, the whole idea of interoperability between blockchains, I think is an absolutely key thing, because everyone's building these blockchain architectures and talking about having your food supply on a blockchain and your banking on a blockchain and everything like that. We're going to need the ability, if we're going to go down that route, to be able to get blockchains to talk to each other in some way. And this is where we need interoperability.
I couldn't agree more with you. And I think that IBC was the subject of this year that didn't happen, right? I mean, a lot of people said this is going to be the year of IBC, but we didn't. There's been so much disruption in the world.
So IBC, sorry, Eric?
Inter-blockchain communication.
Okay.
So there's actually 2 levels of IBC. The first is how do you commute value across blockchains? Because the problem that we have right now is that every blockchain, they now have the capacity to create tokens, and there's active marketplaces and a ton of value in each, but they're all silos with respect to each other. So if you want to move value from one blockchain to the other, the only way to do it is through a centralized exchange that is in essence a legal entity that runs nodes on both blockchains, and will serve as either as a trading desk where they take the trade themselves, or they find you an exchange partner. And in that case, you're very clearly into regulated territory, right? So now you have to do KYC and all this other kind of stuff. So that's one aspect of it, is the moving of value across blockchains. The second sort of deeper integration of IBC possible is RPC calls, where you could have one smart contract on one blockchain call a method on a smart contract on a different blockchain, right? And that is that may actually be an impassable object objection, because then you get into all kinds of issues like the compatibility of the encryption layers used across the two, and issues of namespace collisions. And I mean, technically, it is not trivial, right?
I've had enough challenges just linking up 2 databases, not even blockchain ones, and trying to ensure you've got finality of the transaction across both databases and keeping them in sync is enough of a nightmare. Once you're talking about that at the blockchain level, that we are talking seriously difficult stuff, definitely.
Yeah, I mean, you see the same thing in blockchain, right? You have an atomicity problem where you're going to have a two-phase commit, and that increases latency incredibly.
Yep.
And you need a standard for the two-phase commit. How do you do commitments, right? How much shit can you put inside of a transaction, right? Because you're going to have to roll it back, and you're going to be you're going to be lazy about it or you're going to be eager about it, and which model is used in one blockchain versus the other, it gets really, really complicated.
Yep.
So we're actually addressing the first level of IBC right now, which is the transfer of value. At the very least, you should be able to move tokens across blockchains, right? And we're working on a technology to allow exactly that at present.
Yeah. Is that something that you can talk about at the moment, or it's not off the radar?
No. It's the particular project in question is called VOW.
VOW?
VOW, VOW. You'll find it as vowcurrency.com. And it's a revolution in itself. I like to say that VOW is not really a crypto project. It's a financial innovation. And it is designed in a way that is going to foster crypto adoption on a planet-wide basis in the fastest possible way. So what Bitcoin failed to do in 10 years, VOW will do in probably a year.
Wow. Okay. I just know that J2 who's just joined us is going to say something about that. Hey, hey JT.
Hey, I'm here. Yeah.
You just joined us at a really interesting time where Eric was talking about one of the projects he's working on with VOW. I've just pulled it up on screen now, but hopefully it's showing it. A great strapline, the future of money is promising. I like that.
And it's funny, that slogan, because it's very true to it's a very literal statement. Mm-hmm. We don't really understand money, right? And if anything, if Bitcoin has done anything, is it has caused people to question what money is, because we've all been taught essentially a myth, right? Since we've all been indoctrinated into this idea that, you know, it's clear that we need money, but the idea is that that you have to get it from somebody else, and in order to do that, you have to provide some kind of service or product or some kind of value to the other person, right? And that's how the 99.999% of the population operates. You know, they're all chasing after each other for these little pieces of paper. But the real nature of money at the top level is it just gets printed out of nothing. And when it gets printed, it gets put into the pockets of the people who are printing it. And therefore, those 30 or so families that run the world today own more than half of the planet's net worth, right? And that's because they're printing it. And it is our adoption and usage of their currencies, which we could properly say they're theirs because they're the ones who manage them, that give them value. So in essence, we are making them rich by chasing after each other for these currencies. And so if you understand that simple fact, you can now start printing your own currencies, right? But the question then becomes one of adoption. Anyone can issue 1 million tokens today, but who cares? No one will accept them for anything, right? Yeah. And therefore, they're not really a currency. So this is what VOW does. VOW is essentially the decentralization of monetary issuance. It allows corporations to issue their own corporate currencies, and those currencies are all denominated in the same unit of account, which is actually the local currency. So in the US, we issue V dollars. In Europe, there are V euros. In Britain, there are V pounds, and we have V rands and V ringgits and V rubles and all of these kinds of things, right? Okay. And then there's a whole economic model underneath how these currencies are minted and how they're distributed and all this kind of stuff. So at the end of the day, when a V dollar gets minted, the reason it's worth $1 is because the merchants participating in the VOW network promise or vow to accept that V dollar in exchange for $1's worth of goods. Okay. And therefore, that's why the future of money is promising, because the future of money is decentralization of currency issuance, and that currency issuance is done on the basis of a promise to take it back.
Okay. I think that's brilliant. I really love that. We're going to have to close off, I'm afraid, as we're running out of time. But I really do appreciate you sharing your knowledge and your information. That was really good. I'll probably stick a couple of links in to the recording afterwards once I've edited it a little bit, but very much appreciated. JT, you didn't get a chance to join in tonight because you joined
I'll just
late.
say hello and goodbye.
Yeah.
That's a
Hey.
very interesting profile image that you have. I've been looking at it. I'm very confused about it.
Yeah,
It's
that's-
nice. It's
that's
nice, isn't it?
intention.
It is NFT.
Yeah. Okay.
Good one. Right. Thank you everyone for joining today. Alina, thanks for coming on board. Hopefully,
Thank you so much.
for everyone as always, it was interesting. Hopefully we can join again sometime. Eric, I'd love you to come back and talk more about VOW at some point as well. I think that would be really, really good. Always happy to promote and encourage projects that are doing innovative things, and that definitely looks like it's sitting here. And the great thing I loved when I first came into crypto was it actually made me go away and learn about the fiat currency system, and that suddenly you realize how that works, and it's not how most people have been taught. So it's great that you're doing that. And I'd always recommend people go to YouTube and watch the Money Masters, which actually explains how money is created. Fascinating video. So folks, great to have you on board.
It comes out of thin air, isn't it?
Yeah, but it's something for people to go away and take a look and figure it out for themselves. Anyway, until next time, thanks very much for joining us. I'll see you all again sometime. Bye for now.
Everyone.
Thank you. Thanks. Bye.
Ciao.
So I hope you enjoyed that. Do come again. Do subscribe if you're not already subscribed. Like, make comments. These sessions are held every week on Sunday evening. A link to how you join are in the link in the comments below. Do come and join us. Do come and learn. Bye for now.